Share capital refers to the portion of a company's equity that has been obtained by trading stock to a shareholder for cash. In its strict sense, as used in accounting, share capital comprises the nominal values of all shares issued. If the allocation price of shares is greater than their par value, for example as in a rights issue, the shares are said to sold at a premium. Commonly, the share capital is the total of the aforementioned nominal share capital and the premium share capital. Sometimes shares are allocated in exchange for non-cash, most commonly when Company A acquires Company B for shares. Here the share capital is increased to the par value of the new shares, and the merger reserve is increased to the balance of the price of Company B. Besides its meaning in accounting, described above, share capital may also be used to describe the number and types of shares that compose a company's share structure. For an example of the different meanings, a company might have an outstanding share capital of 500,000 shares. It has received for them a total of $2 million, which in the balance sheet is the share capital. The legal aspects of share capital are mostly dealt with in a jurisdiction's corporate law system. An example of such an issue is that when a company allocates new shares, it must do so in a way that does not inequitably dilute existing shareholders. Types of share capital. Authorized share capital is also referred to, at times, as registered capital. It is the total of the share capital which a limited company is allowed to issue. It presents the upper boundary for the actually issued share capital. Shares authorized equals shares issued plus shares unissued. Issued share capital is the total of the share capital issued to shareholders. This may be less or equal to the authorized capital. Shares outstanding are those issued shares which are not treasury shares. These are all the shares held by the investors in the company. Treasury shares are those issued shares which are held by the issuing company itself, the usual result of a buyback. Shares issued equals shares outstanding plus treasury shares. Issued capital can be subdivided in another way, examining whether it has been paid for by investors. Subscribed capital is the portion of the issued capital which has been subscribed by all the investors including the public. This may be less than the issued share capital as there may be capital for which no applications have been received yet. Called-up share capital is the total amount of issued capital for which the shareholders are required to pay. This may be less than the subscribed capital as the company may ask shareholders to pay by installments. Paid-up share capital is the amount of share capital paid by the shareholders. This may be less than the called-up capital as payments may be in installments. See also, share, corporation, balance sheet, paid-in capital, share premium account, shareholders' equity, references. External links, detailed breakdown from Companies House.